Everyone for joining us today. Hopefully you're having a beautiful day wherever you are. It's gorgeous here in Morro Bay. I'm going to go ahead and get us started. Let me go ahead and share my presentation here. We will go ahead and dive in. So first of all, welcome everybody for coming today. I am thrilled to be offering this course on behalf of Mission Community Services. This is the Intermediate QuickBooks course. So this is taking a deeper dive into advanced features and understanding the value of financial reports. Let's see, this webinar is designed for small to medium-sized business owners who want to take a deeper dive into QuickBooks and beyond, beyond adding bank feeds, transactions, customers, vendors, and products. So we actually did cover those topics in the second part of this course, which should be available here via MCSC on their YouTube channel. So if you haven't been there, go ahead and check that out. So once again, this is a deeper dive. This is part 3 of the 3-part course. So part 1 was Introduction to Bookkeeping. That would be very helpful if you're learning about what bookkeeping is, why it matters, basic terminology, basic concepts. Part 2 of that course, of this course, is the Intro to Bookkeeping, or Intro to QuickBooks, course. That covered comparing QuickBooks products, basic navigation, and customizing QuickBooks software, and adding in some basic transactions. So those were our first 2 courses, which was the Intro to Bookkeeping and the Intro to QuickBooks. And then this is that part 3, which is Intermediate QuickBooks. So first off, we're going to get into who this webinar is for. So item 1 here, you are or aspire to be a small business owner or entrepreneur. So this class is catered to smaller businesses. Larger businesses will have more complex bookkeeping needs, but the basics will still apply. If you have a complex business, and have been managing your books for a while, this course may still be too introductory for you. I did want to get into, so the second item here, you have a basic understanding of using and navigating QuickBooks. So you are probably an active QuickBooks user and know your way around. If that is not the case, might want to check out that course 1 and 2. That sort of gets you into the concepts of bookkeeping and also making your way around QuickBooks and some of the basic features. And the third part here, so you want to become more familiar with things like payroll, inventory, reconciliation, and financial reports. So that's what we'll be covering today in this class. We will be reviewing these topics kind of at a high level, but you could really drill into any of these subjects like for hours to become an expert. So that's why I say to become familiar with these topics is what we'll be doing today, rather than becoming maybe a total pro in some of these topics. This is also not necessarily a class where we'll have the time or space to dig into specific issues or questions you're running into. For specific troubleshooting, you might want to consult with a professional, right? So you might want to contact MCSC as far as talking with a consultant. You could look into bookkeeping services or maybe QuickBooks Live. So if you're already doing all of this really actively and you're running into some problems, this course will not address those issues. It's going to give you the foundations for these issues. And also I will give you some resources though, for if you are looking to troubleshoot or take some next steps into learning more about any of these topics. So with that, I'll bring us to our learning objectives. So learning objective number 1, we'll be using QuickBooks for payroll. So what are your payroll options? How do you access them if you're going to be using payroll for QuickBooks? Our learning objective number 2 is inventory management. So if you are using QuickBooks, or we'll also review, third-party applications, but essentially if you're dealing with inventory, how do you track, order, organize, and report what you buy and sell? So we'll be covering that. We're going to cover reconciling accounts. We call this keeping the books up to date. So I'll do a little deep dive on what reconciliation is, why it's important, and how to do it. And lastly, we'll dip into financial reports. So we'll look at the what, why, and how of financial reporting. So why these reports are important, and some of the basic reports that you can use and how to use them. All right, and that's going to bring us here into section 1. So this is using QuickBooks for payroll. What are your options and how do you access them? So when we're looking at a payroll service or a payroll application, something to help us with our payroll, there's a lot of different things that we're going to want to look for and consider when trying to decide what is the best tool for us to use. So I've outlined a few things here that you might want to, keep an eye out and take a look at. So first, you've got tax and filing options. So does your payroll software allow you to easily file some of the tax paperwork that'll come due, with your W-2s, with your W-9s? Do you have contractors? So some tax software, or some payroll tax software, or some payroll software, will give you the options for easy tax filing. Other applications, they might do some of that computing of the payroll hours and all of those calculations, but they might not really have options and access for standardizing your tax filing. So something to take a look for. You'll also want to look at your options for payment. So this is paying your employees. Do they allow you to do things like direct deposit? Is there a long timeline for how long it takes to, once you actually make that payment? Are we looking at a 48 hours, for people to receive payment in their bank account? Is that something where you have to cut a check? They'll receive that in a week. If these are considerations that you might need to take a look at when considering how you want to pay people, both employees and contractors. Of course, you're going to want to look into the pricing for your payroll software. So are there discounts involved? Do they bundle with some of the other services? So for example, if you're using a software to help you with bookkeeping, do they have an add-on that if you use their payroll services that there might be a little bit of a discount? And then you also want to look at on pricing. Sometimes they'll have basic features that will be included, but there might be special situations that have more cost to them. So really, when you look through your pricing options, and we will go into our next slide here, we're going to compare a few different options, but looking at what's included in the pricing, what's not included, what might be an add-on, do they have a per employee rate that you're adding in, or is it all included? Another thing to consider is support. So if you are someone who likes to be able to hop on the phone and ask somebody a question, if you have payroll issues, do they offer that? Can you hop online and get live support while you're working on something? Do they work through email? So this would be the provider that you're working with, something to consider how to get in touch with them. Also access options. So I don't know if you've been an employee before, but at the come tax time, some people will allow you to actually hop on an online portal and download things like your W-2s. So is there some online access for different employees? And is that something that you need or care about? And lastly, we've got time tracking here. So some employees, right, if you've just got salaried employees, they're going to have the same time that they're going to be submitting every week or every month, but you might have employees that you need them to clock in and clock out. Some payroll services provide this, some payroll services do not. So that's also something to consider when you're looking at some of these different payroll options. Our next slide here, we're going to do just kind of a brief comparison slide. So what I've done here is I've pulled out a few different options. So I deal mostly with QuickBooks, right? So if you are using QuickBooks Online, there is an integrated web-based product that you can just add on. We will be taking a look at sort of how to set that up, but that would just be actually within QuickBooks. There is an additional price, as you can see here. You've got a core cost of $45 a month plus $4 per employee. And that is at your base price. There are some different levels in between. And then at the high end, you're looking at Elite, $125 a month and $10 per employee. So you really want to drill in if you're looking at these options and see, what are the differences between Core and Elite? And do you need what's being offered in Elite, or can you get by with Core? I think that QuickBooks Online payroll, of course, is better for smaller businesses that are already using QuickBooks Online. If you're not using QuickBooks Online, it would not make sense to do QuickBooks Payroll online. And if you're using desktop, of course, we'll get over here, but there is a different version of payroll for desktop. Another option I wanted to discuss with you guys is third-party applications. I'm going to show you how to look for these, but this is just an example of a commonly used third-party application. It's called Gusto. This is already approved by QuickBooks, which just means that it integrates very easily. So it's already primed to be able to feed in to QuickBooks and do that fairly seamlessly as far as putting in your journal transactions for your payroll. And as you can see, it is actually a little bit less expensive than both of the core products for QuickBooks, but you do have a little higher of an per employee rate. And then as you can see, they do get up to $150 a month. So definitely look into what's being offered and the difference and what kind of services you need help with for your small business. Most of these third-party applications, they are better for smaller businesses. It does offer time tracking. This Gusto specifically does offer time tracking, and it integrates really well with QuickBooks Online, but a lot of these third-party applications will not integrate with QuickBooks Desktop. So if you are a QuickBooks Desktop user, they do have a specific product with payroll that you would actually just buy into. So as you can see here, it starts at $50 a month, $2 an employee, it moves up to the high end rate of $335 a month, $1 to $5 per employee. And you can see that's probably better for smaller, up to more of a medium-sized business using QuickBooks Desktop. Now, if you're a larger business, you're probably going to hire on a payroll service. So this could be someone that you're hiring. They're probably going to have their preferred service provider. So whether that's Gusto, whether they're using, and I'll show you some of those other options, but this is if you're managing it yourself. So for the smaller to medium-sized businesses, some of the different options for how you could get into these payroll items. So next, I'd like to show you, essentially, if you're using QuickBooks Online and you wanted to find out what sort of third-party apps you could use. So what I've brought here is, this is just the landing page. We're actually in a sample company here called Craig's Design and Landscaping. I just wanted to show you, if you were looking to see what kind of apps you could use regarding payroll, how to get there. So if this was your home page, right, should look somewhat familiar. You would have your navigation bar to the left-hand side here. You've got your gear bar here. You've got your new button. And if you were looking to add in apps, you're going to go down to this app tab if you have that. If you don't seem to have this in your navigation bar here, it's pretty simple to just pop into this little search button. You could just type in apps. It's going to bring you to the same place, and I'll show you where it's going to bring you. Actually, let's get you to the app screen. Okay, so if you were to type into apps here and go to the apps tab, brings you to this page, which is going to show you all of the different applications that are already approved and feed into QuickBooks Online specifically. So what I wanted to show you is, if you made it to this apps page, you could type in the name of an app, right? You could also just type in something like payroll, or you can go down to this browse category, and they're going to have all these different options for you for depending on what you're trying to get done. So if you were to click on something like run payroll, what it's going to do is it's going to then show you all of the different applications that they have that link really easily with QuickBooks Online. So as I said, if you were a larger company, you could look into here and make sure that whoever you're hiring to do your payroll, whoever you're hiring would already, know that it would integrate with QuickBooks. But you can see you've got ADP, run powered by ADP. They've got the payroll option, payroll by Patriot, Gusto, as I mentioned, a very popular one. So that's how you would navigate to find your different options for if you were looking to do a third-party application and not do payroll directly through QuickBooks. But what I wanted to go back and show you too, so If you decided that you were not going to do a third-party app, and let's say that you had QuickBooks Desktop or QuickBooks Online and you wanted to use the QuickBooks feature, I'm just going to go back here and just show you. So if you were at your home screen again, you click over to this Payroll tab on the left-hand side. That would bring you to this page. So this is your payroll page. As you can see, you've got your employee tab, contractors tab, a tab for workers' comp. If you had not set this up at all before, it's pretty much going to get you started with a screen to get started, right? From there, it's showing you these are the steps. You set up payroll, you can create paychecks. They do also have some integration as far as doing your tax paperwork as well. And I'm just going to kind of show you what this would look like. So it really does bring you step by step, but if this was something that you had signed up for and that you wanted to work with, you add an employee, and there's a pretty basic employee information screen that's going to have you fill in, their name, their address. You're also going to fill in something like if they are hourly, if they are salary, if there's any, background information on that. Once you get past that basic employee screen, you'll get a detailed employee management page. It's going to ask you about things like withholdings, pay rate, frequency. Once you have filled in all that info, essentially every week it's going to give you a page that's going to look like this, right? So you can see you've already got a few employees that have been added into the system. You can see some of these guys are salary. Some of these folks have, their hourly going. So you can see all those numbers filled in. Once a week, or depending on your pay period, you would hop in here and go ahead and be putting in your hours. So as I mentioned, you might have a different feature to do hourly tracking, but you would just type in these numbers. It's going to go ahead and give you your totals. You would preview your payroll and pay those out. It's also going to automatically create the transactions for tax and employee withholdings. So that's they try to make it pretty seamless, just step by step, but just to show you that this is one of your options if you are considering looking for some assistance with your payroll. And so that is what in QuickBooks Online, actually, that would pretty much look like here. So in a nutshell, those would be your three options as I see it for payroll options. So you've got your QuickBooks Online, QuickBooks Desktop, or a third-party application, which is going to feed back into either to QuickBooks Online or your bookkeeping software. All right, so, and then the only other thing that I wanted to say on here is if you're not using a payroll management system that does integrate with QuickBooks, you can add a journal entry into QuickBooks that would reflect your payroll. So that would include your wages, your salary, your taxes. And you would just get a report, right, from your payroll service or from your application. And you would essentially just type in a journal transaction directly. I did want to say this is doable, but it's super risky, right? There's a lot of opportunity to input information incorrectly. And as we all know, there can be a lot of tax implications for getting this wrong, right? So penalties and taxes. So just something to consider if you're not going to use a software for payroll, that if you are manually entering those transactions, just make sure you're triple checking those because there can be penalties if you get these incorrect. All right. So that's essentially our section 1 here. So from there, we're actually going to just head on in and go to our second learning topic. And we've got some inventory management. So some of you might run businesses in which you have inventory to keep track of, right? So you're buying things and then you're reselling those items. And you need a system in place to track, order, organize, and report what you sell. So with, we're going to look here into, again, some different inventory management options. So you do have the QuickBooks options for inventory management, and I also listed 2 other third-party applications for inventory management. So we've got QuickBooks Online Inventory Management, Desktop Management, SOS Inventory is a third-party application. Fishbowl is also a third-party application. So QuickBooks Online is an integrated feature. It is included automatically if you have QuickBooks Plus, QuickBooks Online Plus, or Advanced. So this is an included price. This is actually the price of QuickBooks Online Plus or Advanced. So this isn't included. It's not an additional fee. This would just be what you're already paying for your QuickBooks software. The general consensus is QuickBooks Online inventory management is useful if you're a small business and you have pretty simple inventory needs. So what I mean here is that you probably don't have a warehouse full of inventory. You're not keeping tracks of really complex inventory needs. This is just probably things on hand that you're pretty much reselling to customers. You're probably a smaller shop, maybe single location. There are definitely many other options if you're getting into more advanced inventory management, multiple warehouses, multiple locations, that kind of thing. So another option is if you are a desktop user, you've got the desktop-based QuickBooks product. This is the same pricing that is included for your QuickBooks software. So this is already included for QuickBooks. This is better for small or maybe a medium-sized business, something a little bit bigger. You obviously would need to be using QuickBooks Desktop or QuickBooks Enterprise, and you might be a little bit more of a complex inventory business. And then our third-party applications. So these would be ones that you would essentially use these for your inventory management outside of QuickBooks, and it would feed back the information that you need as far as the actual transactions that would affect your books. It would essentially pull that information and push that to the QuickBooks Online software so that it would be very easy to transfer over and not have to manually input data. But as you can see, these are standalone costs, right? These are not necessarily included with your QuickBooks Online or desktop. So for SOS inventory, you're looking at the entry level about $50 a month up to $150 a month. For Fishbowl, they start up at $359 a month. So you can even see in the pricing, right? Fishbowl is for very complex inventory management needs. So you might be a manufacturing company. You might have some a warehouse or warehouses that you need to track a lot of different inventory and a lot of complex inventory needs. So you can see that if that's really your business and your business depends on being really on top of all of your inventory and all of your inventory needs, you might have to be looking at a third-party software that's going to be a little bit of a higher cost, obviously, than if you're a pretty simple need here. You actually don't need to add on any additional costs. This would just be your accounting software and have some simple inventory needs, or you might need accounting software as well as paying for a third-party application to manage your inventory needs. There are also people like inventory consultants. So if you do have complex inventory needs, it might be a worthwhile thing, call them, see if they do a complimentary a reference call where you can just, tell them a little bit about yourself and your business. They might recommend, hey, SOS inventory is perfect for that. Or, hey, you really don't need any of this. You can be fine with QuickBooks Online. So that's another thing to consider as you're looking and deciding what type of inventory management you would need. Might not be a bad idea if you're getting stuck doing your research to contact an expert and a consultant here and see what the best options would be. Let's see. So all of these inventory management softwares are going to allow you to track what's on hand, get alerts when it's time to restock, get insights into what you buy and sell. And I know specifically in QuickBooks Online and Desktop, you can enter non-inventory products, for example, like a service, so that you could still add those types of things onto your sales form, but that's not necessarily inventory management, but just something that you know. And then that was our kind of comparison slide. And then what I wanted to show you next is if you were using QuickBooks Online, if you were a QuickBooks Online user and you wanted to set up inventory needs, it's essentially a 5-step process in order to use QuickBooks Online inventory with QuickBooks Online. So I'm going to just walk you through a few steps here. I just sort of highlighted them out, and I'll just sort of talk you through the different options. So most simply, right, if you decide I'm going to use QuickBooks Online, I'm going to use inventory, the first thing you have to do, you're going to go ahead and turn it on. So you're going to want to head over to the Gear tab. And actually, I'm wondering if I can bring you just back to that page where we have, let's see. So if you were back to your page, you're going to go to that Gear tab, which is right here. From there, you're going to head over to your Sales tab. So you can either head to the Sales here or in your Gear tab. You're going to go into Products and Services, and you're essentially just going to set up inventory tracking. So it's actually, sorry, I'm making it sound a little bit more complex than it is, but really you're going to head to that Gear tab there, which is going to be located up here. You turn on the ability for inventory tracking, right? It's going to ask you if you want to set up things like pricing, and if you want to set up quantity tracking and price rating. So essentially you're just going to go in, you turn on your inventory tracking. There's a few selections in order to, a few different features there. The next thing you're going to do is you're just going to go in, you're going to add your inventory. So you might already have a big list of inventory. No problem. You can actually upload a list of inventory if you wanted to do this in bulk. Otherwise, you can go ahead and just add it in item by item. So there's going to be a screen for adding inventory. It's going to give you a bunch of different fields that you can fill out or not. So you can really drill down and get as complex or not with what you're adding in for your inventory. So you could add a photo of those items, maybe who you're buying it from, a description of the item. And once you've added in that inventory, so you've turned on your inventory tracking in QuickBooks Online, you've added a few items of inventory there. So you've added your products, which essentially is your inventory. You've added your inventory levels. Next step is going to essentially be keeping track of your inventory. And then how do we do that in QuickBooks Online, right? There's a few different ways you might think about keeping track of inventory, but as far as QuickBooks Online goes, we're actually keeping track of that inventory by keeping track of everything that we sell, right? So that's invoices or sales receipts. Now, the difference between invoices and sales receipts, an invoice is something that if someone comes and buys something and they're going to pay later, that's an invoice. If someone comes in and they buy it right there, right at the counter, you're going to issue them a sales receipt. So they bought it, they get a receipt. So these are the two ways that you can keep track of your inventory using QuickBooks Online. So you've already put in all of your inventory, right? Let's say you've got the example they always use in accounting is widgets. It's just a general inventory item, right? So let's say you have 10 widgets and then you're selling them. So as you sell them, someone comes in, you sell one widget, you give them an invoice. QuickBooks now knows, okay, you've got 9 left. Someone else comes in, they buy a widget, they pay with cash, you give them that receipt. Now you're down to 8 widgets. So keeping track of your inventory in QuickBooks Online comes through keeping track of all your sales and all of the different numbers of products that are in your sales. So that will be auto added in. So that essentially auto tracks, right? Once your inventory hits a certain number, so let's say that widget, let's say you had set it up so that once you hit 5 widgets, you want to get a reminder to restock. Once you've sold, so once you're down to 6 widgets and then you sell that last widget, which brings you down to 5, you're going to get a notification. It's going to say, hey, you're down to 5. Would you like to go ahead and restock? If you've set it up where you had added inventory before using your vendor, you can actually just go back up, open up a new purchase order and reorder that equipment pretty simply from that reminder. But anytime that you add in more inventory, you're just going to go ahead and go back to this step, which is just adding in your products or updating the number of inventory products that you have. And once you've done that, so here you've added your inventory, keeping track, you've sold some inventory, restocking, we're adding a little bit of more inventory in. And really the last step here is you can check on the status at any time. And what I mean by checking on the status is using inventory reports. So if you head over to the report section of your QuickBooks, there's a few different areas that you'll see, but regarding, if you go to your standard reports, there are reports that specifically talk about sales and customer reports. One of those is the best seller. So if you want to see, you know, what items are selling the most, you've got a sales by product or service, where you'd see the total sales for each of those products or services. You can also drill that down. You can get a summary or a detail. So you could go ahead and run that report. Hey, it looks like this item is selling the best in the last week. Maybe I should double the inventory that I have on hand for that. You could also see, hey, this item, I ordered 20 of them a year ago. I haven't sold any. So maybe I should put those on sale. See if I can move those out, maybe not order those again. You've also got some reports where you can check your stock, right? So if you do an inventory valuation, you can see the quantity that you have on hand, the value of all of those items of your inventory, the average cost for each of the products. You can also see something like a physical inventory. So if you have a worksheet, if you wanted to, you could go in and physically count out, make sure you can compare that to the quantity that you have on hand with QuickBooks, make sure that that's all reconciled. You can also check if there's anything that you've ordered. So if you go into your expense and vendor group of reports, you can open the purchase order detail. You'll see, oh, look, I already did order 20 more widgets, or, you know, I ordered them from so-and-so and it cost me this much. So checking the status is once you've done these first couple of steps, at any time, you can jump into your reports and get a feel for what's been selling, what do I have in inventory, and also, you know, what do I need to order, or what might I already have ordered. And in a nutshell, that is essentially how you tackle inventory in QuickBooks Online. So as I mentioned, of course, there are other options. You've got your third-party applications, which will just feed in some of the top-level inventory information back to QuickBooks. And you've also got QuickBooks Desktop. So if you're a desktop user, it's a very similar set of steps. But just so you don't get too overwhelmed here, in a nutshell, that is sort of how you would go about opening inventory, adding inventory, keeping track of it, and restocking. All right. And with that, that is going to bring us to our section 3 of our learning objectives. And this has to do with reconciling accounts. So if you are an active QuickBooks user, hopefully you've seen or heard about what reconciling accounts is, right? So we're going to cover what is reconciliation and why does it matter. So on a very high level, reconciliation, it's essentially matching your books, so matching what you have here in QuickBooks, and matching it with your actual accounts. So matching, what does the bank say? You know, what does your credit card say? What do your loans say? These should all be the same numbers, right? But if at some point there was an error, so let's say you entered something incorrectly into QuickBooks, how would you find out? You know, you could go, if you weren't doing a reconciliation, it might be a really long time before you notice, hey, I actually entered in a sale twice, right? So it's actually not correct. But it would be impossible to know if you weren't actually checking it against something like, for example, your bank account, right? It'd be really easy to see, hey, yeah, I only got paid once, but this said I got paid twice. So being able to find the differences there. So you're going to take your internal record, which is your books, and compare it with an external record, which is any of these documents from maybe from a loan company or for your bank. We want to make sure, of course, everything is accurate. We want to make sure that all of our expenses and income are accounted for. And the way that we do that is through reconciliation. So I'm going to show you how to reconcile and essentially how we're going to do that in QuickBooks Online here. So the first thing to know before you reconcile is that you need to have a copy of all of the bank statements for that previous month. So a lot of times people will want to reconcile, maybe on the 30th or the 1st, but you do actually have to wait until you get that bank statement issued out. So that might actually be a few days after the physical end of the month. You also want to make sure that all of your transactions have been added and categorized in QuickBooks before you hop in to reconcile. So you have to make sure that all your T's are crossed and all your I's are dotted, and that information is all in there to the best of your ability before you go ahead and reconcile. So as you can see here, they outline it, open up your bank statement, match your books to your statement, and success, reconciled. So they make it seem super easy, but if you were to hop in on QuickBooks Online, the way to actually do that is if you're in QuickBooks Online, you're going to go to that gear, which usually lives right up in the upper right-hand corner. In that gear, you'll look under Reconcile and Banking. You'll see that tab. It's going to bring you up to a screen essentially that looks like this. So if you wanted to reconcile now or later, so if you said, yeah, let's do it, it's going to then bring you to this page here. And it's going to ask you, which account do you want to reconcile? And you can reconcile and should be reconciling essentially every account that you can compare to an outside document. You should be reconciling those every month. So as you can see from their drop down here, they gave us a checking account, savings account, an inventory asset. So if you had inventory here that you were double checking on, this would be a good time to do those. If you had prepaid expenses, or even something like a truck, if you had a loan, these are all accounts that you can reconcile. So the first step, of course, is just going to be choosing which account you would like to reconcile. And then actually, I'm going to go back there for a second. And unfortunately, I kind of closed this out, but right under here, it's actually asking us two basic questions. So in both online and desktop, you're going to start by entering your opening balance. So that was for reconciliation, you're going to enter both of your opening and closing balances. So the opening balance is probably already filled in. This is not, if this is your first time reconciling, you actually want to type in, okay, what was the opening balance at the beginning of the month? Otherwise, it's going to pre-populate. And then you're going to enter your closing balance. And that's going to be the balance that is listed on your bank statement. So if you go ahead and enter in your opening and closing balance, the next page it's going to bring you to is going to be a page that looks like this. So what you can see here, I had entered a beginning balance at 5,000, which is what they had here. I entered the ending statement balance at 6,000. So what they're showing me here is that as is, there's actually $1,000 of a difference in between what is stated in QuickBooks Online, which is here, right, the cleared balance, and what is stated on my bank account, which is what the statement ending balance is. So they're saying, hey, actually, look, exclamation point, there's a $1,000 difference between what you have here in your QuickBooks and what your bank is saying. They say you have 6,000, we say you only have 5,000. That's $1,000 that is unaccounted for somewhere or another. What you're actually going to do is you're going to go ahead and you're going to click through, you're going to look at your bank statement, right? So you're going to pull up your bank statement. That is your outside document. We're going to compare it with our inside document, right? So I'm looking right here at what is considered the inside document. So the QuickBooks information. QuickBooks is our inside. I'm going to take my bank statement and I'm going to match all these up. So let's say I've got my bank statement here and I see, okay, I found this payment that went to Robertson Associates. I found Bill's Windsurf. I found Robertson. You're just going to go down and actually click in each of these. And as you click through, this difference amount is going to reduce, because what you're saying is you're looking at your QuickBooks statement and you're looking at your physical statement and you're saying, yes, QuickBooks, I do see this on my physical statement. Thank you. So you're going to go ahead and click this down. And if you've entered all your transactions incorrectly, I'm sorry, if you've added all your transactions in the right way, this will come down to a $0 difference. Okay. Once you get it down to a $0 difference, it's going to say, it's going to ask you, well, essentially it's going to say, once you get down to $0, you've reached a $0 difference. Your reconciliation is complete. It'll allow you to reconcile that. And then essentially your books are caught up and up to date up to that month. Okay. So really, as I mentioned, reconciliation is just opening up taking your physical statement, matching that to the books, and reconciling the account. So choosing which account you're going to do. Once you do that, you're going to open this up. QuickBooks is going to list all of the different transactions that have happened in that account. You're going to physically look at your bank statement, click off all the ones that match. And if you've done this all correctly, you're going to have a $0 difference and you're done. Of course, in a perfect world, that's how things go. Every once in a while, you will not be able to get to a $0 difference. Your question might be, okay, what do I do if I am unable to get that to a $0 difference? So of course, there are a couple of options, but essentially, I wanted to give you guys some problem solving guidance. But first thing you're going to want to do, of course, double check on those numbers, the beginning and ending balance. So, did you accidentally type in the wrong number when looking at your bank statement? That's an easy one. Might just be a data entry error, right? You're also going to want to look through maybe your transactions. Are there any of these that were manually added? So if things that didn't happen on a card, that they weren't automatically pulled into QuickBooks. So that could be, for example, like I'm looking right here, right? Sales tax payment 3840. If this was manually inputted, did I accidentally put 3480? Maybe I mixed those around. So double checking anything that you physically typed in. There's another option. It's called the discrepancy report. So you can actually go to your reports, run a discrepancy report. It's going to show you where they possibly see the difference. So if you are in here and you run a discrepancy report, it's going to say, hey, actually, we noticed that this is in here twice. So that's another option for you, is run that report. And then, of course, there are a multitude of online guides and tutorials that will walk you through step-by-step some different options if you can't get it to $0. The last resort option is essentially it's called overriding a reconciliation. To an accountant or a bookkeeper, what that means is you put in an adjusting entry and it forces your account to hit a $0 balance. I will say that I wouldn't do this if I was just doing my own books. I would definitely talk to an accountant or a bookkeeper. Often, if it's not getting to $0, it's because there was an issue, and you've really got to go back in and fill that issue rather than just putting a Band-Aid on it, because that issue is still going to be there a year down the road. Even though you put that Band-Aid on it, it might look like it's all good, but you still do have something that's not quite matching up between your bank account and your QuickBooks account. So I will say that, they will give you the option to override and just reconcile. Be very hesitant with doing that, because you're really liable to kind of dig yourself into a hole you can't get out of. So hopefully that helps you kind of understand reconciliation. Like I said, I don't want you to I feel like this concept can be sort of overwhelming, but in a nutshell, it's really just matching your bank account to your QuickBooks account, and going through those step by step. And once you've done that at the end of the month and all your accounts are reconciled, you know that all of your transactions are completely up to date. All of the reports that you are running are going to be accurate. And that's actually going to get us into our last and final learning objective here. So we are looking into financial reports. So the what, why, and how of financial reporting. So you should be using, ideally financial reports are there to get us information, and then we're using that information to get results. So on a very high level here, I'm sorry, there's a little blurrier than I realized, but of course, to get to reports, there's an entire reporting tab on our navigation bar. So you could click into reports. It's going to look like this. You've got standard reports, custom reports, management level reports. The number of reports that you have will depend on what version or what type of QuickBooks product that you have. So if you have QuickBooks Basic versus QuickBooks Advanced, there are going to be different types of reports that are available. You can also, if there's something that you really like as far as a report, you can always favorite it and it will show up right up top here. As you can see, they have some already marked. We will be going into the balance sheet as well as the profit and loss, as well as a cash tracking as well. All right, so I just wanted to show you here. Of course, this is just sort of like what the reports page looks like. So you click on that by going to your left-hand navigation tab, clicking into reports, and here we are. And I wanted to start with, utilizing financial reports. So why do we need financial reports? What's the advantage? One advantage is to be able to do things like projections. So once you've got some information in your bookkeeping account, you might be able to say, hey, here's how my business has been doing. And then from that, then project, right? So if I was to add in a different product or add in a different employee, you can run some reports that will be able to give you some projections, also known as pro formas. So that would just say, okay, in 6 months, if I added in this product, my business could go this way. In 3 months, if I, wanted to add on a new employee, here's how how it would affect my finances going forward. Another important thing is being able to look back. So historically, how is your business trending against your past performance? So have you had any progress over the last year? Were there changes that you made where, hey, July was a really profitable month, right? Like, why was that? If you weren't sure, looking back at those reports can really flag situations in which your finances were good or bad, and then how to change those. This is also a great way to look at trends, right? So if you're noticing seasonal trends historically, or if you're noticing, oh, every time I try to offer this service, it's impacting my business in this way. So historical reporting is a great way to really drill in and try to get some more information on the actions that you've taken in your business and how those are affecting your finances. Of course, you've got analysis. So people use financial reports to understand the health of their business. There will be accountants that will use things like ratios. So they might look at, and we'll get a little bit more into that a little bit further on, but you might want to use like your current ratio, right? Where you compare your current assets to your current liabilities. That's going to give you a number that you can compare to other businesses in your industry and helps you get a feel for, hey, yeah, my business is, really profitable for a business in my industry, or no, really, I should be making, this type of a profit margin, or so those ratios can be useful information, and it's through the financial reports that we can do that level of analysis. Of course, we want to use financial reports to make smart choices. So as I just mentioned, making big decisions, like if you're going to add on an employee, are you just like having a stressful day and then decided, oh, I'm just going to add an employee, I can't handle this anymore. It's time to do that. Or are you really looking at your data? Are you looking at your cash flow? Are you saying, okay, yeah, I do have enough capital right now to add in another employee, or, Yeah, sales have been trending up. I definitely think I've got enough in the bank to add on a new piece of equipment, or so rather than making decisions based on the weather, based on how you're feeling, you can really dial in and make sure that you're making smart and informed decisions based on the information that you have available to you. And the way to look at that data, that information, is through financial reports. Another thing might just be awareness, right? I think it's just really easy for people to not look at things frequently and then sort of have them collect dust. So doing financial reporting every month does bring in awareness, right? What is happening with my money? Are we going up? Are we going down? Are there big, if you're looking at a financial report for the month and somehow it's $3,000 different than the month before and you haven't done anything, like, why is that? And would you notice that this huge change had happened if you weren't looking at these financial reports, right? So awareness and just being on track of what is happening with your money. Are you making money? Are you losing money? Is it all accounted for? And then lastly, I just have stakeholders. So another reason people often use financial reports are things like maybe they're trying to apply for a loan. Maybe they're trying to get a credit card. Maybe they're trying to talk to investors or create something like a business plan. So a lot of people will ask for a profit and loss, or an income, also known as an income statement, or they might ask for a balance sheet. If you're looking for investors, or if you're looking for someone to give you advice on how to move your business, they might be asking for things like financial reports. So that's another important thing as well. So a lot of these might be for your internal use, for your knowledge, and then you do have instances where it's for outside use, and that would be your stakeholder. All right. I also wanted to mention, as far as stakeholders, this might even be something like getting favorable terms from vendors, right? If you're trying to buy inventory and they want to give you 15 net payment terms, it's a possibility that if you can show them some of these financial reports, that they might extend that credit limit, right? They might give you a better deal. They might say, okay, yeah, you're fine for 30 days. You definitely have enough to cover all of your, between your assets and liabilities and equity. So anyway, it might just be a useful piece for actually negotiating different rates. So another stakeholder item to consider. All right. And so from here, I just want to kind of tell you, there are dozens and dozens and dozens of different reports that you can run. I'm going to cover what I consider kind of the standard trifecta. So you've got an income statement, which is known as your profit and loss. That's going to show profits and losses over time. You've got your balance sheet. This is more of a snapshot of a business. So at any given time, the assets, liabilities, and equity of the business. And thirdly, you've got a cash flow statement. So this actually shows the liquidity of your business and the money in and money out. Some people do get a little confused, why cash flow statement versus an income statement. Cash flow is actually, cash in the bank, money that is happening. An income statement might include something like, a good example of this would be a accounts payable, right? So let's say you owe someone $1,000, but you haven't paid them yet. That's going to be shown on your income statement, right? So you've accounted, if you're doing accrual-based accounting, if you owe someone $1,000, yeah, that's going to show up on your income statement that you have $1,000 of a liability, money that's going to be going out. However, if you had not paid those people yet, that would not be, you would not see that reflected for your cash flow. So you would still have $1,000 in the bank, so that you could see a little bit how those two things would be different, right? So this is going to account for non-cash transactions, so things that maybe haven't exactly happened yet. Also things like depreciation or interest, those types of things. and cash flow is actually hard cash that is available or not available going in or out of the business. And for each of these three, we're just going to kind of do a little bit of a high level, but we're going to take a look at what each of these items are, the when, the why, the how, and then we're just going to take a look at some of an example of one of these. So we've got our three reports: income statement, balance sheet, and cash flow statement. And to get us started, we're going to head over to our income statement. So this shows profitability for a chosen time period. Some people run these daily, right? Some people want to see how much did I make today, or, how much did I make versus, versus yesterday. Some people write these weekly, quarterly, annually. So as often or not as often as you want, you certainly will need these for tax statement or for tax season. This is how your accountant is going to categorize, what's write-offable, what is not, what needs to be included for tax season. So just so you know, you can use this as frequently or not as you want, but you certainly want it for at least tax season. And then the why would you run an income statement? So generally you want to know, am I losing money? Am I making money? By how much and on what? So you can see that could be pretty useful information here. And on a very, very high level, how this works is you take your sales, right? So everything that you've sold minus the cost of goods sold. So what it costs to make those sales, right? So you got your sales minus your cost of goods sold. That's your gross profit. So at the end of the day, what you actually made from those, or what you would actually be able to take from those sales, right, would be your gross profit. From there, you're going to minus out your expenses. So these can be things like rent. This might be things like advertising. This could be things like, meals that have been added in. And at the end of this, the very end number is your net profit or your net loss. So an income statement at the very end is going to show your net profit or net loss. And that's going to be the golden number that kind of gets you, that comes out of the income statement. So I wanted to show you here a very, very high level. Once again, sorry if this is a little bit blurred out, but you can see you've got a profit and loss here. I ran one for the entire fiscal year. This would be January to December of last year. And on a high level, you see our income here, right? So they have the income. We've got our expenses. And then at the very bottom, you see our net income, which was $2,088. And so what I wanted to show you here is actually, so this is on the very bottom of the income statement. It's also why this is called the bottom line, right? So when you talk about the bottom line, when people want to know how much money did I make? How much money did I lose? That's why they're talking about the bottom line there. It's actually the last number. And we're just going to drill in a little bit more. But so you've got this income number. This would have already taken out our cost of goods sold, which they don't have any cost of goods sold in this example. So that was $5,903. And then they were going to minus our expenses, $2,899.09, which got us to our net operating income, $3,004. We had a few other expenses here, miscellaneous expenses that they wanted to add in, probably tax related, net other income, and that got us to our total net income. And I just wanted to show you on the next one, I kind of drilled down a little bit more, and hopefully this is clear enough to see. Also, if you just want to Google, example income statement, QuickBooks Online, you can get to these and check these out. But I just wanted to show you, if you were to look deeper into something like, that expenses item. So what I did is I went down on the expenses. You can see all the different categories, right? Advertising, automobile, job expenses like job materials, legal fees, maintenance and repairs. And that got us all the total expenses, which was at $2,789.10. Oops, sorry about that. And so just so you can see, right, that high level. So all I had done on that next slide was click into the expenses and it drilled it down. So income minus expenses gets us to our net income. And then here you can just sort of see a more drilled in report if you wanted to, really look into every single item that is included on that statement. And you do have the ability in QuickBooks, you could always click into these, look at the individual transactions, but that's our income statement. And once again, so that was essentially sales minus cost of goods sold, which got us to our gross profit, minus our expenses, and we did our net income or our net profit. This could also be a loss, right? If this was a negative number, this would be our net loss. From there, so that's the income statement. You've got your net income, and then a balance sheet. So a balance sheet actually does include a little bit of information from that income statement. So that net income, if you were to cash that out and make that, that would be part of your owner's equity. So I'm just going to get in here to the balance sheet, but essentially a balance sheet gives us a snapshot of the assets, liabilities, and equity. So these are often run monthly, definitely for tax season. They ask these questions like, what's the overall health of the business? So when I talked about earlier, those ratios that people use, like the current ratio, they're taking numbers often on the balance sheet. So they're comparing the assets, which is what the company owns, versus the liabilities, which is what the company owes, and comparing that to the owner's equity or the amount of capital that was put into the business. So that's sort of what we have here, right? What does the company own? Assets, owe, liabilities, and then at a fixed point in time. And then essentially how we get to that. So there's a general accounting equation. It's essentially assets minus liabilities equals owner's equity. This could also be written as assets equals liabilities plus owner's equity. And I'm going to show you on the next slide. When you drill it down to super high level, right? The assets in this company are worth $23,153. And the liabilities and equity, so that's the money that we've put in, the capital, and the money owed is at 23. So this is, and that's why they call it a balance sheet, right? These two parts of the equation have to balance. So assets balances with liabilities and equity. And I'm going to show you on the next page here, if we do sort of dial into some of these items. So if you were to look at your assets, they're going to show you your current assets and fixed assets, which got us to that total. And then you can see here some of the liabilities or the liabilities. They did the same thing, right? Current liabilities. And then if they, this company specifically doesn't have any long-term liabilities like loans. So you can see they've got their accounts payable, some credit cards. This is money that they owe, right? Accounts payable, credit cards. So you see that amount. So not too much owed out. Oops. And then you can see our equity. So that's the money that the business owner has put in. You can see that the opening balance for this was $18,495. We added the net income. So this was actually the income from our income sheet, right? So we added that into our, that is now considered part of our equity. That is the money that we made and profited. And once you've added that in, it kind of brings us back to that balanced balance sheet. And that's where the assets equal that liability and equity. All right. And so that's that balance sheet. So you can see where that net income came off our income statement, went into our balance sheet. And then, like I said, this one is a little bit more expanded. And then you could even drill into any of these. It's going to show you all of your, for example, fixed assets. It's going to show, do they have a truck? Do they own equipment? Are there inventory in there? What's the money in our bank account? So it's just going to drill it down by different categories and make sure that that all balances correctly. And the last financial report that I wanted to show you guys was our statement of cash flow. So as I mentioned, really this shows the liquidity of your business. So the income statement showed our profits and our losses. Our balance sheet compared assets, liabilities, and equity. The cash flow is only going to show the liquidity or cash levels of the business. So when do we run this? This is more of an as needed thing, right? This is not a report that you need for taxes. This is not a report that you need to run for an accountant. Usually this will just be for your own knowledge. I would say it's a definite if you're considering making a large cash decision, right? Hiring on employees or buying a new piece of equipment or a truck, right? So I say, do you have the cash for inventory or events? You might also want to consider running this report if you're considering taking out a line of credit or a loan, right? Do you have enough to finance the things that you're looking to do in the short term, or do you really need more liquid cash in your business? And the how, so essentially we're going to take your starting cash balance, right? So your bank account number, all the money that's coming in, and we're going to minus all the money that's going out. And that's going to get us our ending cash number. This sounds pretty simple, right? But it can be really valuable. And obviously, as I mentioned, this is different than that income statement. But what it's going to show us is the actual amount of liquid cash that we have in the business if we needed to make some large payments for things sooner than later, right? The way that we drill out the cash flow is they're going to look at the change in cash in these 3 different areas. So you've got your operating activities, we've got investing activities, and financing activities. So for example, here we've got our operating activities, right? So we had a net income that came in, right? That was the 2,888. Oops. And so you've got your net income, and then these were some adjustments, right? So it looks like we paid out, or it looks like, okay, accounts receivable, right? So money that is owed to us, it looks like $5,000 is owed to us, but hasn't hit the account yet, right? Same thing, it looks like we owe $2,000 out. That's going to change the amount of cash that we have in our bank account here. Looks like we owe some money out for our MasterCard. And then it looks like we've got some tax payments here, right? So originally you had operating activities, your net income was here. However, there was $2,442.62 worth of adjustments. So actually that was a negative cash flow for our operating activities. As you can see, investing activities, they had invested into a truck here, right? So that was, it looks like we paid out money that would have been in the bank account for that. And then it looks like that they had, this was the opening amount of equity that we had in the business, right? So this is the money that we had put in. So once we factor out, right, we had all this money in our account, we took the money out for the bank or for the truck. We also lost a little money that we had, money that was paid out that hasn't yet been collected for accounts receivable. So you can see that at the end of the period, we actually have a cash flow of $4,645. So it can be a little bit confusing, right? Because your net income was just $2,888, but we've got this amount of cash at the end of the period. So you can see how those numbers can all be a little bit different. But knowing that, you know, $2,000 worth of income, how does that sort of affect the level of cash that you do have? You know, it looks like they had, this is the January through December, so for the full year, right? So for example, if they had not bought this truck, they would have a lot more in liquid cash, right? If they had, for example, collected on all of these overdue accounts receivable or payable, that would have a very different implication on the cash amount that we have available. But yeah, so these can be, all of these used either on their own or a combination of can really help you get some insight into your business. And that is the last financial statement that I really wanted to show you guys today. So I did want to just take a moment to say thank you. I wanted to provide, of course, some more resources. There's the team at MCSC. You can always give them a call. They've got a great crew. They can link you up with a consultant for free. So if you're just having general questions, I'm actually a consultant at this point with MCSC. So if you want to talk to me a little bit more just about general questions or maybe how to set some things up, You can contact them at the Women's Business Center. I also wanted to mention that QuickBooks, I know that they have a QuickBooks Live product now. So if you are already a user of QuickBooks, that might be something you want to consider. It's essentially live bookkeeping. So you can be in touch with a one-on-one bookkeeper for a monthly. I mean, you can obviously get a bookkeeper who is not associated with QuickBooks Live as well, just a private bookkeeper. And then there's tons of online learning available. I did want to provide some links here. So I'm happy to email these out if anyone would like them. But we've got some different resources, both via QuickBooks and also, of course, your classic Google search will get you to some of these. There's some great YouTube examples at this point. So any questions that you guys do have, plenty of online resources, as well as if you're more of an in-person type of person, you can always reach back out to us at MCSC, and we'll be very happy to get you on your way. So I really hope that was some useful information for you today. And please let me know if you have any additional questions. I know that we'll have all 3 courses available on the YouTube here soon. So if there was anything in this course that you were like, man, that was a little above my head, I do recommend, giving it a start at that first course that I offered about bookkeeping into that second course. I do think that you're going to get a lot of familiarity with different terminology, assets, liabilities, or navigating if any of that was, a little confusing. That I do think that if you kind of go in order there, that they do build on each other. So if there's anything that was over your head, you're like, I feel like I should know this, but I don't, definitely feel free to go back through some of those MCSC YouTube videos of some of the recordings of our previous classes. And I think that could be hopefully very helpful.